Good morning, at least for 3 more minutes. We are going to get started right on time at 12 o'clock Eastern time, 11 o'clock Central time. Uh-oh, we have an echo. Get rid of that echo. Let me close my echo shades. Be right back. All right, I am here. Patricia, hey, thanks for coming. Anisha, driving during the previous webinar. We had fun in the last event earlier today, but that's okay. We're going to have fun again tomorrow at the live trade setup event. Boy, we're running out of them before the end of the year. It's amazing. Christmas is upon us. New Year's is upon us. We are getting close. Craig gives me a YouTube is working. Awesome. Yeah, we had some weird YouTube streaming issues this morning. Anas, hello. Thanks for being here. Hopefully we don't have them anymore. Margaret, what's up? Thanks for coming. Appreciate it. We're going to give everybody another minute or so before we jump right into it. Here, December 15th, 2021. Very mild winter so far, especially for me here in Charlotte, North Carolina. Named after Queen Charlotte. Assad, hi. Assad says hi to everybody. Welcome. Thanks for coming. Anisha says about institutional traders. Oh, you were reading about institutional traders. Got it. Yeah, Elvis from Facebook. Facebook's working fine. Sweet. Thanks for being here, Elvis. Love your name, by the way. Chris, good morning. Good to see you. They follow the footprint. Terrence says, you cannot start without my list of common mistakes from Seattle. Oh man, Anisha says in order flow. I mean, order flow is a tool. That's why I use volume profile. I mean, that kind of gives me a better sense of equilibrium from a day trading point of view. I think that's important. You know, and our point of view from a day trading point of view is a lot different than most institutional traders. Ciao from Italy, Massimo. Massimo, remind me, where are you from in Italy? What part? Anisha, I like both. I like the volume, the order flow volume profile, order flow VWAP, and technical analysis. That's just me. So, all right, let's go ahead and get started here. Feel free. So, yeah, I have a PowerPoint, but we're going to kind of freestyle a little bit, going back and forth between charts, and I'll answer any questions related to anything futures trading related or trading related. For those of you who don't know me, my name is Jim Cagnina. I'm the Senior Education and Training Specialist at NinjaTrader. And for those of you who do know me, I am still Jim Cagnina. And actually, it's kind of weird on the title page because I'm Jim Cagnina Jr., actually James Cagnina Jr., but it looks like senior. But no, that's senior. I gotta have Jen work on that slide. In any event, common mistakes new traders make. We've done this one before. I think it went off pretty well. We're going to keep moving forward here. Margaret says, where did you learn your TA? What does TA mean? Hey, Gregory, how are you? I do want to remind everybody trading futures options on futures involves substantial risk of loss, not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility, although that could be an equation for opportunity, also an equation, leverage and volatility could be an equation for opportunity, also equation for risk. So be careful, only fund your futures trading account with risk capital. My personal definition, money I could afford to lose doesn't change my lifestyle, lengthen my retirement horizon, or overly stress me out. So everyone's unique and different. I get it. Be in a good place. Stress in life matters. We make bad decisions when we're under stress. At least I do, for sure. So any questions on that type of man? I'm going to be using the real-time NinjaTrader simulate. I'm logged in a simulated live account. So I have a sim account up here. We're going to be doing, just toggling back and forth here, looking at bad practices. So I guess you could say, and we will move forward on that basis. Sam from Facebook, good morning. Good to see you, my friend. Donnell Washington, 184, Indiana University, and Bernie Truex, 184, Cal Poly, two of my buddies, two of my kids' friends are doing it in the top 20. It's exciting times. Hopefully we're back to stay. All right, overtrading. Let's talk about, I'm going to go through my PowerPoint. Overtrade. Too many trades, right? Too many trades. The brokers of the world are not going to be happy with me saying this, right? Because you pay commissions on trades, and it's or you generate order flow revenue for equity brokers, and no one likes to hear me say too many trades, but it's true. I mean, I think one of the reasons it's true is the software is so good with respect to data, with respect to the ability to get in and out of trades, with respect to seeing a real-time P&L on your screen, a real-time unrealized P&L on your screen. It's tempting, right? Temptation is there. And if we talk about this all the time in our Tuesday, Wednesday, and Thursday live trade setup events, that patience is important. Right? Identify a trade setup, execute your trade plan, and then be patient. And I think this is one of the top problems, like overtrading. It's a very prominent thing I've seen. Now, just remember, before my role here at NinjaTrader, as it exists right now, I was a broker for 20 years, and I was able to talk to traders, retail traders on the phone, one-on-one, and this is a common theme. I'd say, hey, Jim, because you look at my account, you tell me what I'm doing wrong. And we'd see, 100 trades in a day before noon. It's too many. There's not that many. Well, I don't want to get ahead. I don't want to get ahead of my PowerPoint, but here's the situation. Let's say you had early morning success, right? You have early morning, right off the bat, winning trade, maybe a couple winning trades. And you're thinking, hey, I'm invincible today, right? I'm on a roll. I can see the market clearly. This is easy money, and all these demons are running through your head right now. And so, now you're thinking, I'm going to make a bunch more money. I'm going to keep it rolling, man. I'm going to keep it rolling. Everything I've seen on YouTube with these people who are driving these Bentleys is true. It's not, by the way. But anyway, I know what you're thinking. So then, sure enough, you give it all back, and then some in the afternoon. So you start out with a good day, and then by the end of the day, you're negative on the day. That's a major buzzkill. You feel bad about yourself, right? Your self-esteem is down. You start second guessing your ability to succeed. All of these demons come into your head mentally, right? Into your conscious. So this is a problem. So easy does it. And I get the question back to me, how many trades is too many trades? And really the punchline here is, how many good trade setups are there, right? We're developing a strategy that's unique to everyone's going to probably have a little bit of a different strategy, a different bit of approach, right? And we're not randomly going into trades, and we're not throwing dice, right? We're actually trying to be scientific in our approach. And when we see a good trade setup, we're going to execute. Maybe there's one good trade setup a day. Maybe there's 5 good trade setups a day. So there's probably not 50 or 100. So anyway, I know I'm kind of beating this point to death a little bit, but it's a thing. It's my first slide, overtrading. So number 2 is part of that, Well, all right, too many trades is the obvious one, but as part of this, lack of a strategy, right? So I don't know, at least in my early career, I was just looking at momentum and deciding to go long or short based on an opinion, which, wasn't worth anything, right? So what markets are you trading? Number one, right? Focus in on a few of the ones that you want to become an expert at, right? Focus. And then when you want to trade, the paradigm of the market is different pre-market than it is during the open. And I'm gonna define the open as the cash equity open for like the New York Stock Exchange, the NASDAQ. That's what I'm going to refer to as the open. And that triggers activity across all asset classes, right? Across crude oil and the euro US currency cross, you name it. So treasury bonds, treasury notes. So what, when you want to trade, open, close, maybe you want to be a specialist at the end of the day, right? And then there's that weird part in the middle of the day, around lunchtime, when just, in my opinion, there is an overall lack of focus in the market because, a lot of the institutional desks and folks like that are it's lunchtime, right? So in any event, when you want to trade is important, and when you want to become an expert in the time frame. Your analysis and your approach is another one that kind of falls into this lack of strategy. What tools are you going to use to analyze the market? How are you going to conduct your analysis? And I'm going to go ahead and we'll just go to the chart right now, and we'll talk about that in a second. My analysis is simple. And I'm going to go ahead and just cancel these orders. Remember, real-time sim account right here. And we did some work this morning in our live trade setup event. So I'm just going to kind of make this screen a little clearer for everybody to see. Okay. So I only have a few tools on here. I have a candlestick chart, Japanese candle chart, right? I have a 10-minute. This is my approach. This is my analysis approach. I have a 10-minute chart. I have an E-mini S&P March 2022 contract. Remember, we rolled over. Hey, level 2, thanks for coming. Margaret says, Craig Ferris, that is very funny. Craig is with bad practices. I got a million of them. I think he's referring to trades he's made. Margaret is giving a thumbs up to NinjaTrader 8. Thank you for that. Appreciate that. I'm going to try to keep up with the questions as we go so I don't get too far backlogged. 10-minute candle. I have at the bottom here, I have an oscillator. I have the commodity channel index as my oscillator, and it oscillates around a zero line. And it gives me an idea of momentum and direction. Lagging indicator. And again, I'm just looking for confirmation on my bias, on my trade idea, as opposed to using it as an absolute answer. Right. And below it, I have a moving average cross, a simple moving average cross. I have a 6-period simple moving. That's my fast, my red. This is a 6-period moving average cross. My slow is a 26. That's the blue moving average cross. The reason it's fast and slow is, the shorter the amount of periods that you're calculating your moving average, the more sensitive it is to price change. That's all. So that's my second thing I have on here. Now, going back to the commodity channel index as an oscillator, you might decide you'd like RSI better. You might decide you like MACD better, or Bill Williams' awesome oscillator. Whichever oscillator you use is okay, right? Because you're going to become an expert on that. You're going to focus in on that, and you're not going to just randomly be changing your oscillators around, because then you'll never be good at anything. Jack of all trades isn't always the best way to go. So that's just my particular choice, right? So you could use whichever one you want. Now I have a volume profile, which is this histogram, this histogram bar on the left-hand side, a series of histogram bars that shows a profile where volume is accumulated over different prices throughout the session. And so that gives me some information to help me make trading decisions. And then I have yesterday's close I have painted on here. I like to see where the market closed at. And then I have a Fibonacci retracement. And depending on what time frame you're trading in, this Fibonacci retracement could be placed at different levels in this particular chart. It's more of an art than a science, but I do like the fib numbers to give me areas of interest, and I like to compare the areas of interest between each other. That's my approach, right? And again, yours might be different, and yours might be better, and that's okay. which is a very, very possible. So in any event, let's have a strategy, right? And so now that part of the strategy is, I'm going to focus in on a 10-minute chart. I'm going to trade from, I want to trade between 10 and 11 o'clock. So that's post open, right? By half an hour, post open by half an hour, 10 to 11 o'clock. I'm going to be an expert in that particular arena. And then I'm going to look for trade setups based on my chart. Overtrading again, trading to trade, right? It's exciting. You're hoping to hit it big. This isn't a good strategy. Bullet point 3, so it's not a good strategy. And I agree with bullet point 3, right? Trading, it's exciting to be in a trade. It's exciting to wager on a football game. But this isn't what we're doing here. This smacks in the face of patience, right? Just always being in a position. And there are some folks that say you should always be in a position. I disagree with that. I think the waiting game, it makes it hard to do, right? It makes it hard to do, especially when you see a trading ladder moving around. And let's pick a market where it's really going to be moving around. And you want to participate. You see these prices, you see this activity. And here we go. We're making new low on the NASDAQ right now. So it's exciting to want to participate in that. That's an emotional response based on adrenaline and dopamine and serotonin and all these things that are percolating in your head. Margaret asks, do you use fibs for entries or for exits? I use them for both. Again, I like to look for areas of interest, right, where I have alignment in my different things. So when I look at the volume profile, if there's an area of interest it's aligning with fibs nicely, and then the fib is placed in a clear and precise level, it could be entries and exits and stop losses and everything. Okay, so trading and trade, we're not going to do that anymore, right? Now, the next thing that's a problem, and I'm gonna keep it in the over trading category, is overcoming the bid-ask spread. The bid-ask spread is part of your cost, right? So let me just pick a different market here real quickly. Let's go to the ES. No, let's go to a 10-year Treasury note. This will make this example even better. All right, 10-year Treasury note. This is probably one of the biggest markets with the most depth on bids and offers that have been sent to the exchange. On the buy side, you can see bids, contracts that are sent to buy at various prices, 10 ticks away from the last traded price. Last traded price is that yellow marker there. And the sell side, these are limit orders that were sent at various prices by various traders and institutions to sell contracts at these various price points, right? The bids and offers in this market are incredibly thick, big, thousands, right? There's thousands of contracts here, which makes this bid-ask spread tight. The bid-ask spread is the difference between the highest bid, the highest price someone's willing to pay, and the lowest offer, the lowest price someone's willing to sell. Right? Think of it as a house. You want to buy your house at a lower price than they're offering. Right? That's a good analogy. So the tighter that is, the better off you are. And when you do a market order, for instance, if you're going to do a market order to buy in this market, you would get the best available offer, which is one tick above the bid. Right? You would buy a contract on the offer at 22.5. Right? And that's a $15 in some odd cents per contract spread, right? So that's part of your cost of your execution. Let's go to a thinner market now. Let's just go to the E-mini S&P. You'll see it's a little thinner. I'm going to freeze the dome. The bid-ask spread's typically still 1, right? And it's a $12.50 differential between the bid and the offer, right? Again, market orders and stop market orders, you get hit at the best available price. And in this particular example, if you wanted to buy on the market, you would buy the 06 halves, right? That's the lowest price someone's willing to sell to you. Now it moves around very quickly, and you will get some slippage, and you will get some action depending on when your market order hits the exchange. But the point is, the bid-ask spread adds to the cost of your transaction. Now, if I do a limit order as an example, let's just do a limit order here at, I don't know, 4604. When I buy a contract here. Now I'm sending an order to the exchange that says, hey, I want to buy at my price or better. That's a definition of limit order, my price or better. So 4604 or better, I can't buy it with a limit order at 0425. It can't give me a worse price. And I'm in line behind, 322 other contracts, right? First in, first out. It's FIFO. Margaret, I just moved my mouse into the middle. That's all I do. Just kind of move it in the middle. Anyway, so again, from a best practices point of view, I prefer to be patient, let the market come to me and try to get my fill. Now, worst case scenario is it doesn't come to me, I don't get filled, and then I try another day or another time. That's okay. I'm willing to risk that possibility for that to happen. And here we go. I'm going to cancel this because we're going to get into a position in a little bit more time. So 1 tick per contract is 1250 in the ES. Now let's go to another market. Let's go to the micro NASDAQ. Now things are getting a little thinner, right? So bids are in a single and double digits. The bid-ask spread in this case is 2 ticks, right? So you got to double it, right? And again, though, this is a smaller size contract because it's the micros. So let's kind of talk apples to apples here. And let me just pull up the NQ. So NQ, I'm going to click on that. It changes my dome. And so here's the regular, I'm going to call it the classic size NQ, a $20 point, $5 tick. And now we have 2 tick spread, right? So now we're a $10 tick on this particular market because the bid-ask spreads are light, or they're smaller, they're less than that. So this is part of your execution cost. And again, it's best find markets that are liquid. Now, here's another example. Let's go to the micro Bitcoin, which is brand new. It doesn't have its legs yet. And I'm going to go ahead and freeze it. Now you're going to see some oddity, right? Single digits on the bid, big gap on the offer on the right. There's a 5 lot sitting here, which is probably a market maker order to help establish liquidity here in this particular market place. But generally speaking, the bid-ask spread's very large, right? So again, a lot of slippage, a lot of problems trading this market, and for sure, limit orders are the cause of the day with respect to this kind of. I'm going to call it small liquidity. Now, I don't want to pick on the micro Bitcoin. It's a brand new contract, and it will get its legs under it eventually, right? We will get its legs under it. It's a great place to trade Bitcoin, and the reason, really, in my mind, is why it's a great place to trade Bitcoin, because it's one of the few places you can go short Bitcoin, right? There's a couple of maybe over-the-counter exchanges. Maybe Kraken is an example of a place where you could borrow Bitcoin like you would in an equity trade and go short Bitcoin. But even like Coinbase, I don't think allows you to go short Bitcoin. So there's huge benefits in trading Bitcoin futures for sure, but mind the volume. I know I'm off on a tangent, as we often do in these events. So you can come to many different common mistakes new futures traders make live webinars, and you'll get a different thing every time. CFDs are even worse, Anisha, and we don't, I'm not a CFD person, and futures are way better in my particular mind than CFDs, but you can have a bid-ask spread there, which could be wacky. I use the word wacky, technical term of the day. So again, I'm not a fan of most CFDs. I have a level 2 trading. I have a kinetic feed. It's because I have this like permanent demo account that I use for the webinars. So mine is not actually a CQG feed, but you can get one through the NinjaTrader platform. The red line in the middle of the dome just shows the low of the day. I have that as a special feature set up. And again, if you want to do that, you just right click. And you could, the great thing about NinjaTrader software is you could right click just in any of the windows, and you're going to get submenus that gives you the ability to do different things. So if you go to indicators or columns, let me just show you columns as an example. Columns, you could add P&L and volume, which a lot of people like, and then APQ and notes. I'm going to keep it simple, keep the fit on my screen. And then on the indicators area here, I've added current day, open, high, low, close out of minute data. So I added that from the available indicators above, and I set it to red. So when I see that red, I know I'm on the low of the day. That's all. And I know because I've been kind of watching the main point, yes, and the footprint. Margaret was wondering about the Bitcoin topics you talked about. All right, let's move on. I have another slide, believe it or not, I think. Yeah. Okay, so these are the things we just talked about. Too many trades, lack of trading strategy, trading to trade, overcoming the bid-ask spread. I'm sorry, I got to go this way. Oh, look at that. We got highlights. Sorry about that. My bad. All right, it's the leverage. These are more common mistakes. Leverage in futures, you get a lot of leverage with futures trading, and some would argue, well, this gives you ability to more efficiently allocate your capital between different types of accounts and investments. That is true. You see that all over the CME Group website. However, it's a double-edged sword, right? Financially, and you can see it on my note down here. Financial leverage can result in losses greater than the initial margin, and traders should be aware of the risk involved in trading futures. So you can control a lot more market notional value in a futures contract than you would a regular, I don't know, let's just say QQQ ETF or SPY or SPX option as an example, or even underlying stocks. So you have this ability to control a lot more market value with futures trading, and that could be good or bad, right? Do not over leverage. Yes, most brokerage firms offer low day trade margins, and I'll give you an example. And I'm going to come back to the slide in a second. Oops. Oh man, I hate when that happens. Hang on, everybody. Hang on. It happens to me every once in a while. I knock everything off my screen. It's embarrassing. All right, I'm back. Let's take a look at what I'm talking about here. I'm going to go ahead and find this is a unique day, by the way, because of the FOMC meeting. So I'm just going to look at this chart right now, and we're going to go long or short. It doesn't matter. Don't actually do what I'm doing. I'm just doing this to show you the idea of margins and leverage. So I'm just going to go ahead and, oops, I'm going to chase this up a little bit. All right. So now I'm going to freeze the chart, the dome for a second. And this brown label here is where I bought a contract. I bought a contract at 46.07 3/4, right? Even the S&P is this market we're looking at right now, and it's traded in quarter points or or a tick is a quarter point. We're $12.50 each, right? And the yellow is the last is where the market's trading at right now. So we're trading right where we got our order filled at, and it's represented here on the chart as well. You can see it in both places, so you kind of know where you're at. Let's go up above here. It says intraday margin, and focus on this one, right? This one here, SimCag Sim account, intraday margin $500, right? So I have, excuse me, I'm using $500 of intraday margin or day trade margin, and we're going to circle back to that in a second. Let's take a look at initial margin. Initial margin now is $12,650. And that initial margin is commonly referred to as overnight margin, and it's set by the exchange. There's no discretion involved whatsoever. Brokerage firms don't have discretion. FCMs don't have discretion. Jim Cagnina does not have discretion. This is set by the exchanges, and what they're saying is, hey, we've assessed a risk level per contract and the E-mini S&P, and we decided that for you to hold a position overnight, we want you to have at least $12,650 in your account. And it might seem like a lot, right? This is a classic E-mini S&P. Now, let's compare that to the notional value of my position, right? So the notional value of my position, I bought a contract at 46.07 and 3/4. So I take 46.07 and 3/4. I multiply it by a multiplier, which is 50, the value of a point here. The notional value of my position, right now is $230,000, $230,875 to be exact. And that's how much S&P 500 I control if I compare right now with one contract. And when I compare that to the $12,000 margin requirement, divide that by 12,650, and we have a leverage ratio of about 18 to 1, right? So that's a lot of leverage. And that's not even, we haven't even talked about day trade margins yet, right? We haven't even talked about day trade margins yet. So it's common for a brokerage firm to say, hey, we're going to offer you a $500 E-mini S&P day trade margin at $500. And it's kind of industry standard, really. And do with it what you want, but we're assuming that you're going to liquidate your position or positions by the close, before the end of the day. And so now all of a sudden we went from 18 to 1, an 18 to 1 leverage ratio. If you just had you're using that $500 as your gauge, and I'm just going to estimate that to be 470 to 1. So wow, that's a lot of leverage. And again, I don't recommend that amount of leverage. And so it's a common mistake, in my opinion, for folks to over leverage their day trading account. You don't need to do it. You already have a lot of leverage, right? You already have a lot of leverage. Now, if you funded your account with $237,000, then you'd have no leverage, right? It'd be 1 to 1. So it's kind of in your control on this part of trading. It's how much leverage you want to apply, but be careful with that. So people say, hey Jim, is it reasonable for me to do 1 or 2 contracts per $3,000, or trade 5 or 6 contracts at a clip? Well, remember, the $500 day trade margin divides into 3,006. So in theory, you could do 6 contracts. In my personal opinion, 1 to 2 contracts per 3,000 is plenty, and it opens you up to a multi-unit strategy, and it gives you the ability to participate in the regular daily volatility that we have. So again, in my years as a broker talking to traders, over leveraging has been a problem, and it can cause a lot of pain. Level 2 trading says, yep, I see guys using 400 to 1 leverage. Makes me so sad. It's a recipe for trouble. Thank you. Thank you for agreeing with me. I think it is. Level 2, we'll talk about that more in a minute. So notional value, Margaret, this is, I just off the top of my head, I know I'm going to take the point size of the stock index, future, whatever it is, and I'm going to multiply it by the price. So notional value changes, by the way, as price changes. But as an example, a classic NASDAQ would be, it's a $20 point. So you would multiply $20 times the price. So, $20 times 15,000, we had 793. That would give you the notional value of the NASDAQ, and so on and so forth throughout the complex. Some of the other markets work a little bit differently, but that's basically how you do it. Okay. How are we doing on questions here? I'm scrolling back. I'm missing a lot of them. This is bad. Yeah, Marcus, there is, for sure. LTQ setting and Superdome. There's some videos on the NinjaTrader.com website that kind of goes through all of that stuff for you. Okay, any questions on margin? Type them in, and we've done this slide already. We've maxing out an intraday margins is not a good idea. Crude oil is another good example where maybe you have $1,000 day trade margin requirement for crude oil contract, a regular CL contract, and again, it sounds attractive, but again, you're running up. Just don't overdo it. I think we beat that. I think we beat that horse enough. All right. Okay. Poor trade execution and trade management. And this is one of these, there's a lot of subjectivity to this particular bullet point. What's poor trade execution, and poor trade management. And this is what we explore Tuesday, Wednesday, and Thursday at the live trade setup events that we do every week. And, we make mistakes, we have successes, we have failures, and we talk about why things work and why things don't work. And, you have this natural volatility that occurs, and which we're trying to exploit, right? We want to buy low, sell high, or we want to sell high and buy low. And so there's this natural volatility we're trying to either avoid or get in the middle of, right? So picking areas to enter and exit are important. And, I rely on the structure of the actual candle pattern itself. And we'll talk more about that in a minute. Market orders versus limit orders. I mean, I'm totally against entering a short-term day trade with a market order. As a general rule, right? I like limit orders. I like to be patient, even if your limit order is just joining the bid or joining the offer, then that's okay, right? So you might not get filled, right? You might not, right? That's the risk of limit orders. But market orders, you're going to lose that tick, right? You're going to lose that tick. You're going to lose that $12.50 just by snapping your fingers. Stop loss best practices. Even if this is my opinion, my suggestion, even if you're not sure where to put the stop losses, a catastrophic stop loss is good practice. Get it in, get it sent to the exchange. And it's just part of the anatomy of a trade, right? And, let's just take a look at the trade we got going on right now. All right, the trade we have going on right now, we don't have an anatomy of trade. All right, so we have let's go ahead and do that. Let's fill this out a little bit better. I'm going to use the chart trader right now. Our position is down here, right? P&L is is looking good. And I want to pick a target, right? I want to say there's a point. This market's not going to go up forever, right? It's volatile. It's not as volatile. It goes up and down. So I'm going to pick a point. And I'm going to say, all right. And again, I want to see if we can get up to the 38.8, 38.2 retracement. I'm going to throw a sell order in there. That's my profit target. And then from my stop loss, if we start making new lows, and again, don't follow me at home alone. I'm just kind of, oh, we got filled. All right, let's do it again. We just got filled. All right, so let's decide I want to enter this market at a certain price. And I'm going to use the 38.2 again, right? So let's this market's not cooperating. We'll use the point of control, just as an example. I'm going to throw it in there. All right, so now I have what I'm going to call an entry level, right? 46.13.5. And once I get filled, and even before I get filled, I could place a stop loss, right? So I'm going to go to the lower of the day, just for an example. I'm going to right click and I'm going to put sell stop market order. So now if I get filled on this order, right, at 46.13, then I'll be long one contract, right? I've bought a contract, and I have a stop loss set at a certain level, right? So if we get down here, stop loss triggers, I sell a contract, then I'll be flat. I won't have a position anymore. So this is called a protective stop. This is what it's called. Instead of using a stop to enter, it would be called a protective stop. Now let's kind of fast forward things a little bit. I want to get filled so I could show you the rest of this. So I'm just going to go ahead and do this. I'm just going to go ahead and get long contract at 46.16. I'm long one. It's color coded green. I still have my stop loss in, right? Now, 2/3 of the trade is set. What's my fourth set? Well, I want to put a profit target in. So I don't know. Let's just pick yesterday's close for the profit target. So I'll right click and I'll hit sell limit. This is pretty much the anatomy. When I say best practices, this is pretty much the anatomy of any trade. Now, this is a simple version of it, right? I have one contract position. I have a one contract profit target. I have a one contract stop order. It's anatomy of every trade you see. And maybe this one is, maybe you'll see a 3-lot with 3 1-lot targets and 3 different stop levels. Whatever it is, you're going to have equilibrium between your position and your stop loss and your target. So this is, again, when I say stop loss best practices, it is. Any questions on that? Shoot them in. Time of day. This is also, this interestingly enough made my bullet points. So the time of day you're trading is important, right? And it's important to understand why things could happen when they happen. As an example, 8:30 East Coast time, 7:30 Chicago time, you have economic releases that come out, government reports, some non-government reports, but mostly government reports, CPI, PPI, jobless claims, all of these kind of things, right? And those numbers, like it or not, have the potential to create exceptional volatility. And trading in front of that number could create a situation where you're exposing yourself to a lot of risk. So think about that. If maybe you are going to become a trader around an economic release, you want to be good at that particular thing. Okay, that's a strategy. That's something. But keep in mind that the market behavior during that time could be volatile. Again, an hour later, 9:30 East Coast time, when the cash market opens up, NASDAQ and New York Stock Exchange opens up. Again, that's going to trigger a lot of institutional investors that come into the market. A lot of folks that are trading for different reasons other than day trading, right? Establishing positions, or liquidating positions, or dealing with options expirations, or all this other stuff. Today at 2 o'clock, Margaret's exactly right. Today at 2 o'clock East Coast time, we have the Fed decision, right? And then equally important, at 2:30, we have the press conference with Powell. So time of day matters, right? The middle of the day, lunch hour, volumes might be a little less. After dinner, US time, volume is a lot less. And so all that stuff, it should be taken into account. So make sure you pick a time of day where there's volume and there's a lack of surprises. Trading after the close. This is my pet peeve, by the way, and I'll explain what I mean by that. So let's just focus on the stock index futures for a second, right? And I'll use East Coast time. The cash market closes at 4, right? The cash market closes at 4. The stock market closes at 4, East Coast time. However, the futures market is open for another hour, 4 to 5. And so there's no underlying cash market there. And I've oftentimes have seen traders decide that they're going to try to, especially if they're having a losing day, they're going to try to squeeze some profit out of that last hour where there's no basis anymore. There's no cash basis anymore. And they tend to make things worse. This has been my experience for 20 years. So that hour after hours. Now there's an exception to this, right? For earnings, as an example, after hours earnings are released, you might want to participate and express your opinion in that last hour, or even in the evening. There's an hour close, but even after when it opens up again after that hour close, you might want to participate based on that. Elon Musk says something crazy, you might want to participate then. But as a general rule, trying to make up lost ground that last hour after the cash market closed usually is a recipe for badness. Seen it happen all the time. All right. Let's check out a chart. Okay. Here's the chart. So, I mean, that's pretty self-explanatory, really. And the answer to your question about the bracket orders, yes, I could cancel the limit. I could add brackets down here on the ATM strategy. And that's kind of a little bit beyond the scope of the course. We can customize an ATM strategy here to circle our position if you want. You know, order cancels order, server side OCO, the whole thing. Okay. We're gonna talk about we're gonna go, you know what, I'm gonna do something a little different. Instead of checking out the chart right now, we're gonna end at the chart. So let's go to changing your mind in midstream, second guessing. This is a common thing, and it's a psychological thing, right? And that's, you know, we have a reverse button on our trading ladder. Never click this. Don't ever click the reverse button. I mean, it usually doesn't work out well, right? So remember, we have a game plan where we've predetermined our entry. We predetermined our profit target. We predetermined our loss. You know, we've set it up, right? And we've done this in a deliberate fashion. And in the middle of that action, once you're filled on a trade, again, the heat of the moment, the passion, the excitement, the adrenaline is flowing, right? And maybe things aren't moving fast enough for you. Or maybe you start second guessing, or maybe you have Bloomberg on in the background giving you some negative information that probably doesn't affect your trade anyway. So you want to change your mind. You want to go from long to short, and you're not giving your trade setup a chance, right? And if you're not giving your trade setup a chance, then maybe it was a bad trade setup to begin with, and we could learn from bad trade setups. So changing your mind midstream, again, from my observation as a broker for all those years, usually results in people reversing positions, and that's, you know, chasing the market on an entry, right? Let's say in my example here, let's just go ahead and liquidate this. You know, I want to, you know, the market's going down. I want to sell a contract. And as it goes down, you know, I want to be patient, right? I want it to come to 46.12, right? And we're at, you know, I want to be patient, but it's still going down. I'm losing my patience, so I'm going to start moving it down, right? I'm going to start trying to catch up to the market, and as a result, I may have got filled anyway. At my better fill, maybe I wouldn't have gotten filled anyway. But now I'm going to end up with a worse position. I'm going to be short at a lower price, right? And I'm still chasing you. I'm moving this down. Now I'm down to 11, right? I'm six ticks. I'm $75 already negative right now. So chasing the market is not a good thing. It's, in my opinion, it's a lack of patience, a lack of discipline, and waiting for the market to come to me. So now here we go. We're filled at 11. Now we're back up to 1150. We'll probably be back up to 1250 where we started from by the time we're done talking. So patience, you're going to hear this theme from me forever. Patience, patience, patience. Corwin says, plan your trade your plan. I've heard never hit the reverse button. I just said it. Lowering or moving stop losses. All right, here's a good example too. So I'm short right now, and I think, well, the market's going to go down again. I'm going to make a profit when it gets to the new low. So I'm going to put my limit order in to buy it. I'm going to put my stop loss in. My stop loss in right now. And what we see a lot of times is as the trade kind of moves toward our stop, traders have a natural inclination to say, all right, I just need a little bit more breathing room, and they move their stop up. Because I'm right, the market's wrong. I'm right, the market's wrong. Turn it up to 11. I know the movie. And usually what happens when that's the case is you get stopped out at a worse price and you lose more money. Right? You know, trailing stops away, giving yourself more breath because you still think you're right, even though you came up with a strategy. Most likely you're acting psychologically instead of, it's hard to take a loss. It's hard for this unrealized to become realized. It's hard. It's mentally hard. I don't want this as long as this unrealized is negative. I'm not doing anything different because I want it to be positive. All right, and we already talked about reversing positions without a plan. All right, let's kind of go down to adding to losers. This is another good one. And again, John Maynard Keynes. Remember that cat from the Depression? The market can remain irrational longer than you can remain solvent. And so it's an interesting comment because it's true. But I don't think markets ever act irrationally. I think they're perfectly efficient machines based on buyers and sellers determining price. The force of all the buyers against the force of all the sellers determines the price, and it makes it rational. But for the sake of this presentation, this is a pretty good comment, right? It's you could think that the market should be breaking way worse than it is now, and hold on to that short position, and it goes against you, but you're going to keep holding it. You keep holding it. You keep holding it. And because you think it's just going to then follow your lead, right? Double down, usually bad. I'm long one, I'm down $500, but I'm going to cost average in. I'm going to buy a second one because then, my average price will be better and I'll have a higher chance of ending up in the green instead of ending up in the red. And, that's, again, short of having a deliberate strategy that's the case. There's nothing wrong with a multi-target entry, but if that's not your plan, just adding to a loser, doubling down usually doesn't work. Again, my experience, my opinion. Deliberate market target entries can be okay. Let's take a look at the MNQ. All right, let's take a look at the MNQ. My notes say take a look at the MNQ. So let's do it. This is the micro NASDAQ. So where I think it is okay, and let me just kind of format this a little bit better. And I'm going to move this out so we can see it a little bit better. And I'm going to look at this. I'm going to kind of adjust my fib line here a little bit, move it over so it's out of the way a little bit. And I'm going to look at the market structure right now and say, okay, I want to go short here. And since it's a micro, I want to end up with a 3-unit trade, right? And so I'm going to pick my 23.6% area. Oops, sorry. My 23.6% area to send a limit order in. I'm going to pick the 38.2% because it lines up nicely to the bottom of the value area. So that's a very good, powerful area of interest right there. Do a second unit. And then for a third unit, I'd like to get a unit at the point of control. And so now I've deliberately am scaling into a position, right? I'm not just doubling down because the market's going against me. And then I'm going to use that 61.8 as my stop loss. Let's do that. Oops, sorry. I'm gonna make it a 3 lot. There we go. And then, we'll end up with, once we get filled, we can start putting our profit target areas down here. So what I've just did was I've kind of, and again, this is just a rough eyeball sketch of what's going on here. But I said, hey, I want to be short. I want to be short 3 units. I want to use my fib lines and my point of control as entries. I want to use the 61.8 as a stop. And I'm being relatively scientific about this. And this is okay, I think, my opinion. And it's in micros. So I'm going to end up with a 30% of a classic size, right? I want, it'll be smaller size. It won't even be a big market. But now this micros give us the ability to scale in, scale out, and have relative less risk compared to the classic size contract. So again, deliberate versus non-deliberate, I think is an important kind of thing. Martingaling, never do this. You buy a contract at a certain price, it goes against you, and you decide to double up, right? So now you're gonna buy 2 more, and you're gonna have a three contract position. And in my example here, the first unit was at 95. The units 2 and 3 are at 90. So the first unit's down 250. The second unit is 0. Total is down 250. And now goes against me again, another 5 points. So instead of buying, I'm going to buy 4 now, and I'll have a position of 7, right? This is called martingale. You keep doubling. And this is one version of my martingaling anyway. And then, my price is now 85. I'm down 5 points. And then unit 1's down 500, unit 2's down 500, unit 3 is at 0. I'm down 1,000. Now 18, I'm doubling again. I'm doing 8, right? So now I got a 15 lot position. Whether you're doing this in a micro or a classic, doesn't matter. The price is at 580. So now I'm down 750 on the first unit, 1,000 on the second unit, 2,000 on the third unit, for a total of 3,750. This is only a 20-point move, right? There's only a 20-point, very relatively nothing compared to what we've seen recently. So keep in mind, this is not a good strategy in future trading. It's too volatile. Again, my opinion, candles are too big. Average true ranges of these candles are too big. And that's where it's at. All right, revenge trading. Well, this PowerPoint's longer than I thought. What time is it? Oh, I got to speed things up. No, I don't. I have all the time you guys want. Revenge trading, right? It's a common thing. Trading after losing trade. Rush to recoup loss without a plan, right? You are going to successful. I don't care who we're talking about, right? Any day trader is going to have a day where you're going to end up with a loss. I mean, show me someone who doesn't, and I'll eat my hat right here live on YouTube. It's the way it is. This is very difficult to do, and it's certainly difficult to be successful 100% of the time. So, natural inclination. Again, I don't want to end the day with a P&L that's in the red. I want to end it. I want to end the day with a green P&L. And so you're going to try to get it back, and you go, I'm just going to refocus. I'm going to be more focused. That kind of snowballs into badness. Revenge trading is never a good thing. Chris says, been guilty of revenge trading by chasing the market. Yeah, we all have, I know, but it's something, we're going to put it down as a bullet point. If we do it, we're going to write it down on our notepad at the end of the day and say, this is my mistake. And we're going to get better at being mentally prepared. Follow the leader. So-and-so says it's time to go short. How many people you just said, I've done this, or so-and-so says it's time to go long, or so-and-so says we're in a bubble, right? Social media is the big culprit here, right? Whether you're at Wall Street Bets or Twitter or wherever you're at, this is one of the many culprits here. Use social media as a source of information, and I do. I follow traders, and I kind of look at Twitter as is my thing. There's a lot of good information you can get, but again, the folks that are saying, hey, I'm buying the 26s because this thing is going to go gangbusters after Powell's done talking, that would be blindly following the leader. Don't use it as a directive, right? Gurus, I'm not even going to say anything about that, right? You go to YouTube and you'll see all sorts of crazy nonsense. As a general rule, anyone who's sitting there on a standing in front of their Bentley with the boat in the background, with the caption of, I make $25,000 an hour trading. That's a red flag. That's a red flag. In any event, level 2 trading is going to stick around till 2:30. All right, trading blindly. Right. So there's some things we could do, we have control of, right? We don't have control of price, but we can do fundamental analysis, right? And here's a picture of all these Fed people. This is what's going on right now, actually, at the FOMC at headquarters in Washington, D.C. Lordy, our focus is on manually trading, not algo trading. So you got the economic releases we talked about earlier. That they're planned, right? When they're going to happen. And the CME Group has a great calendar. CME Group here, I'll show it to you. Trading events calendar. Let me just pull that up real fast, if my browser lets me. Oh no, I want to go not events calendar. I want to go to economic calendar, CME Group economic calendar. Bear with me here, guys, bear with me. And so, and this is based on Econo Day data probably, and here's the calendar here. You could scroll through. Today's the 15th. We had CPI, in Great Britain, we have the CPI coming out, PPI, France, CPI, Italy, CPI, and then US pops in here, the MBA mortgage applications report came out, Empire State Manufacturing came out, retail sales came out today. And so I know what's going to happen Thursday, right? I know I could look at the calendar and I could see all the things, got housing stats coming up, and let's click on that and see what we get. And we have a little area here, little thing. It says, okay, here's what the consensus is. Here's for tomorrow's report. Here's what the economist consensus is. 1.563 million, and there's a range here. And there's what the previous housing stats starts came out with. And so when the number comes out, if it's within consensus range, it might not do anything much to prices, but it might if it comes outside of the range. If it's a surprise or a miss, as they call it, it could dislocate pricing. So this is kind of what I'm talking about with respect. You could use Econo Day or Forex Factory, whatever you want, to get this information, but you can know this ahead of time. The economic releases, press conferences. A lot of times, if President Biden is going to go up and talk about something, we'll know ahead of time, right? We'll know at 1 o'clock he's talking about inflation. And so we could be prepared, right? We could be prepared. Maybe we don't want to be in a position then, right? Because it could cause price dislocation again. Or one of the Fed guys, the Fed guys or gals, I'll use guys or girls unisex. Don't yell at me about my pronouns, but, it's, we know oftentimes when these things are coming up. Meetings, FOMC, that's today. We're going to have an announcement today in, an hour? In an hour and 1 minute, we're going to have an announcement. And then an hour and 30 minutes, we're going to have a press conference. Wheel out Chairman Powell. So now we want to be careful. We want to be on guard because whatever he says could result in price action. OPEC Plus, another big one. If maybe you're an energy trader, maybe you're a natural gas trader, these guys have monthly meetings and they do projections and they talk about controls that they put in to try to steer prices to where they want prices to go. Anyway, that's fundamental analysis. Technical analysis is what we do Tuesday, Wednesday, Thursday in the live trading events. We try to find support and resistance. We look at the candle structure to do that. We use a couple of indicators. We use volume and volume profile. And we look at everything from a short-term and a long-term point of view, right? So we do that and come up with strategy and try to implement that strategy. Whoa, to the end of the chart. Any event, let's take any questions here I missed. Let's type them in here. We're right at the 1 o'clock. It's amazing. We're right at the 1 o'clock period. And that's a great question. That's not a dumb question at all. I'm going to read this out. And it may be a dumb question. It's not. Is it better to focus to trade on one market like ES to trade manually as opposed to multiple? And I'm going to argue it's better to focus on a couple of different markets instead of many different markets. And if you just focus on one, that's okay. And here's why I think it's better, because you generate muscle memory, right? And when I say muscle memory, you see patterns reoccur. You see, when different candles move different ways, and you kind of get in a groove. It's kind of like, practicing free throws, or I don't know, whatever sport you're in. It's kind of like you're developing your 10,000 hours. You're getting in rhythm with the market, and you kind of have an understanding of the paradigm of that market as it trades within the time frame you're looking at it. So that's a really good. I think it's impossible to be an expert at all the markets, because the other reason why is because markets have different. All these different asset classes have different drivers to them, right? We have the stock index futures right now, which are reacting to Omicron, supply chain, inflation, and the Fed. We have currency markets. We had in Great Britain, we had a central bank announcement. I think it's either today or tomorrow. Same with in the Euro ECB, Bank of Japan, and those affect the currency crosses, right? So you have these international central bank policymakers that, as you kind of relate these currency crosses to the U.S. Central bank processes, you end up with a little bit different drivers for currencies, right? Energies, we have the report we just mentioned, the inventory report we talked about this morning, but that's issued every Wednesday at 10:30 by the Energy Information Administration, which is a part of the Department of Energy, and that's a supply. That's a supply report that traders use to determine price. Natural gas report's coming out tomorrow. Metals, I'm just freaked out about metals in general, so we're going to skip over those. Treasury bonds. We see what the M1 money supply is. We know tapering's coming. We have this kind of information that's going to drive the yield curve, right? We hear yield curve all over the place, and you could make a decision on trading either the yield curve or individual portions of the yield curve. And grains, they marched completely to, weather-related, grain yield-related, all sorts of different things on the grains that could affect the price of the U.S. dollar affects grain prices. So there's different drivers between different markets, and it's really hard to be an expert on all of them. If you ask me a question about corn right now, I wouldn't know. I would be the last person that would be able to give you good information on corn futures, as an example. Terrence, thanks. Appreciate it, man. Look forward to seeing you again, hopefully tomorrow. Yeah, I appreciate everybody coming today, by the way. A thumbs up on YouTube. Thank you so much for clicking that. We do these things for free, and I enjoy doing it. I started my career early in the 80s on the floor of the Board of Trade. I kind of stepped away from it a little bit, came back to it, and have been involved with retail stuff, retail online trading for a long time, and I enjoy it. So I appreciate it. Tell your friends, your family, countrymen, neighbors, whoever you want. Tell your enemies. We'll make them your friends. Love to have you there. Richard asks, how do you access the replays? Just go to the NinjaTrader YouTube channel and just kind of toggle around in there. There's replays on all the different events. Wednesdays and Thursdays have typically been kind of one-off kind of topical events, whereas the Tuesday, Wednesday, Thursday events. And then there's other scheduled events on the training page that Isabella popped in here, which shows events related to other folks other than me that are smarter than me that do presentations also with respect to NinjaTrader platform and indicators and stuff like that. So feel free to join in on any of those. Lori asks, long term, do you think it's possible to be a consistent manual trader? Yes, I do. And I'm not algos, I think, are a different story, right? I think the algo folks, the algos that are good are locked down. You can't participate in them. The algos that might be good now, I think the paradigm of the market changes and they become ungood over time. So, the system trade stuff I'm scared of, but that's just my opinion again. Thank you, Level 2. Thanks for being here. Good luck this afternoon with FOMC. Yeah, no, I mean, it just, Lordy, it boils down to, in my opinion, your psychological makeup and your ability to control your emotions, focus on your trading plan, accept losses when they come. We're doing a psychology of trading class event next week, which is going to be a lot of fun. So I encourage you to come to that one also. Jay, thanks. Appreciate the comment. Thanks for coming. It was good seeing you. I'm just going to scroll up here and make sure I didn't miss anything crazy. So Stephen says, regarding Martingale, please contrast that with scaling into a position at a price that pivots. Martingale specifically doubles down every time you enter a position. So you're going to go one, maybe in my example is a little different than what you might be used to, but you got 1 unit position, then you have a 2 unit position, and then as it goes against you, you have a 4 unit position, and then as it goes against you, you'll have a 8 unit position, then you have a 16 unit position. That's different than what you're suggesting with the pivots. This whole idea can't go any lower or can't go any higher is a bad one because it's not true. It could always go higher. It could always go lower. Second trading, I think, is next Wednesday, week from today. It won't be on the list until Friday. That page refreshes on Friday. Sorry about that, Chris. Cindy, so depending on how you got here, they'll be listed on the YouTube channel under live streaming events, or if you're logging in through the Zoom feature, there's that platform training page that Isabella is cutting and pasting into the chat. And Isabella, if you're still there, if you could do it one more time into the YouTube and Facebook page, the platform training page. So they have a link. YouTube will not let me since I'm not logged in some weird way. I don't know why. Arwin asks, guys, do you have a Camarilla pivot points and stock screener? This is, I don't know that question. But when you get to NinjaTrader, you right click and you go to indicators, and you're going to get a list of a lot of stuff. And a lot of the stuff is customizable. Almost all the stuff is customizable that you could go ahead and apply. In addition to that, there are, since this is a development platform, there's numerous plugins for the NinjaTrader platform that you could find. So if you just go to the NinjaTrader ecosystem or even NinjaTrader plugins, you're going to get a whole list of these. Cindy, cool, thank you. You are welcome. I think we're done here today. I actually want to remind everybody trading futures options on futures can involve substantial risk of loss not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility. Although that could be an equation for risk, it's also an equation for opportunity. So be careful. Risk capital only, easy on the day trade margins. So Asia asks about the CME. If you just type in Google, Asia, just type in Ucia, I'm sorry if I pronounce your name wrong. If you just type in CME Group Economic Calendar, it'll come up right away in the search. CME Group Economic Calendar, it'll come up right away in the search, and you just click on that. Okay, and then here's that platform training. Make sure you have a capital P and capital T. I know it sounds weird, but that's part of the URL. You got to have a capital P for platform, a capital T for training. These events will all probably end up on a different URL at some point, but right now that's where they're at, and you'll see a whole bunch of stuff on here like that. So here's some of the ones we do. All right, so that's it. I am going to answer a couple more questions. M Wims says, can you please show how to add a Fibonacci? Yeah, Fibonacci are easy to do. So really, let's start over. Let me just kind of delete the one that's there. Now, you want to find a swing A to swing B, right? So I'm going to go A to B. This A to B, or maybe you want to go, you use the 1040 bar A to B, to the bottom, high to low. If it was ranging upward, it would be low to high, but it's going to be high to low today. So I'm going to go ahead and just either hit my F8 key, or I'm going to go down and hit my pencil key, and I'm going to hit Fibonacci. Where is it? Fibonacci retracements. Fibonacci. We'll call it Fibonacci. There's a dude from Italy in here, right? Click on that. Now I've activated it, right? I also want to activate my crosshairs though. So I've activated it. I'm going to pick my high, and you could do it from the actual tip of the candle to the tip of the candle, but it tends to get in the way, and the ratios are the same. So what I do is I just move it over to the right. I'll click at the high. I'll come down to the low, and I'm done. I've added it, right? And then if I want to kind of adjust it any way, I just grab the 0%, double click. I could do stuff like add levels, delete levels, subtract levels, do whatever I want. And same with some of the extension lines and stuff like that. If I want to extend the lines left to right and all that stuff. So that's how you do it. Pretty simple. F8, Craig. Thank you. Shecker says how to add volume profile weekly. Yeah, I don't know if you could do that really. So I'm sticking with the volume profile for the 23-hour trading session. You might be able to. Let's take a look. Breaking new ground for me here. Never really considered volume profile weekly. So you could probably, let's see, should be on calculate on each tick. That's good. Volume, standard, sessions, minutes. That's all good. I'm gonna do some research on that. My guess is this is a plugin scenario for NinjaTrader. I don't think you could do it from the standard template that I just opened up and showed you. But one of the things you can do, which is kind of cool, and maybe this will do what you want it to do, but I could right click, I can go to data series, and no, let's see, hang on, let me see if I remember how to do this. I can right click, I can go to drawing tools, then I could click on fib, and then I could just cherry pick how I want to. Oh, no. You're talking about volume profile. Same thing. Right click. See if I can get this right. Drawing tools. No, indicators maybe. There is a way. Bear with me here while I kind of remember this. Drawing tools. Order flow. Here we go. I figured it out. Okay, right click, drawing tools, order flow volume profile. Order flow volume profile. Click on that. And I could cherry pick, right? I could say, I just want to see this candle to this candle. And then it'll apply a mini volume profile to whatever range you choose. Let me show you how to do that again, since I forgot. Go right click. You're just going to right click on it. And again, drawing tools, and then order flow volume profile, which will activate it. And then you could, again, just pick whatever you want to pick and just kind of go there. Okay. All right. I appreciate everyone's time today. Hope to see you again. Best times to trade. You got to pick your own time frame, whatever works for you. I like to post after the market opens, 10 o'clock to East Coast time, 10 o'clock to 11. That's my personal preference, but whatever preference, make it your own, own it, and you should be good. Level 2 says his dog is watching him with his puppy eyes. Time for a walk. Have a great walk. That's a great thing to do. Stay active. I'm off for that. I'm going to leave you guys with this. Be safe out there and be good to each other. Thank you.